Hello everyone. Am I audible?
Yes, you're audible, madam.
So let's continue with the part of how to write the journal entries. Yesterday we discussed in the earlier class we discussed about the what is an account and its rules. Now let's understand how to write a journal entry. Okay. So if you just look at here, I think the screen is also visible to you all. Is the screen visible to you all? So when we start writing the journal entries, if you just look at here, the first one, journalize the following transactions. Before writing these entries, we should know the three accounts what discussed in the earlier class. And they are personal account, real account, and nominal account. So we were having three things, that is personal account, and for personal account, the rule is debit the receiver and credit the giver. This is about personal account. And real account, the rule was debit what comes in, credit what goes out. Debit what comes in and credit what goes out. This is about real account. And personal account, here we talk about the names of the persons, names of the institutions, companies, organizations, or names of the banks. And your real account, we talk about the things or the assets which we can touch, see and feel them, or liabilities. That all comes under the real account. Next comes the nominal account, where we will debit all expenses and credit all incomes. So this was the three rules, and based on these three rules, we will try to write the journal entries for this following question, whatever is given over here for us. So Mr. Raj commenced his business with cash rupees 50 lakhs. So when you look at here, what is telling? Raj is commencing business. Commence means starting the business. So whenever he's starting business, when he's starting business means he's investing amount into the business. What he's doing is bringing. So whenever we are investing means what is telling? You just look at here, commenced business with cash. Yes. So whenever any transaction is given, just first try to understand or try to differentiate what are the different accounts that are available in that particular question. So here we have cash, here we have Mr. Raj. Raj is a personal account, name of a person, and cash is what? Real, which we can touch, see, and feel them. So it's a real account. So Raj is a personal account, and personal account rule is debit the receiver, credit the giver. Now, what Raj is doing? He's starting business. So when he's starting business, what he's doing? As per business entity concept. In the concepts we discussed, business is different, owner is different. So when owner is bringing cash into the business, means he is a giver. He's giving cash to the business. Who is giving? Mr. Raj. So what we have to do as per personal account rule, debit the receiver, credit the giver. So here Raj is a giver or a receiver. He's giving cash to the business, so we will credit the Raj. And we cannot write his name because as it is own business, whenever he's bringing starting business with some cash, that we call it as capital, and we credit Raj capital. He's giver na, so we will credit him. Now what is bringing? He's bringing cash. Cash is what? Real account. And real account rule is debit what comes in. So when Raj is bringing cash into the business, now in the perspective or in the view of business, we have to decide, understand that whether cash is coming into the business or going out of the business. So when he's investing, cash is coming into the business. So when cash is coming into the business, as per real account rule, debit what comes in. What we have to do? What is coming into the business now? Cash is coming. So we will write cash account debit. Like this we'll write. Debit means we'll write like this entry. Cash account debit. Who is giving? Raj is giving. Raj is a personal account. Credit the giver. So we will credit him. Whenever we call it as credit, we write to who is giving? Raj is giving. In the form of what? Capital. So we write to Raj capital account. To Raj capital account. Like this we write the entry. Cash account debit to Raj capital account. Cash account debit to Raj capital account. So like this we will write the journal entry. And whenever we write journal entries, our format will be like this. The first one will be the date column. Next will be particulars column. The next column is LF number we call. That is ledger folio number. And the next column is debit amount in rupees. And the last column is credit amount in rupees. Credit amount in rupees. So this is the format. And I write like this. When we are purchasing, when we are starting the business on 1st April, so I'll write April 1, 2017. We write cash account debit because as per real account, cash is coming into the business. Debit what comes in? Who is giving? Raj. Raj is a personal account. Credit the giver. So we write to Raj capital account. To Raj capital account. And the amount is 5 lakhs. Debit means we write in the debit column. And credit means we write in the credit column. And for every transaction, we write a narration. Why? Because only by writing like this, the owner may not understand. So as soon as we write any entry, we write below that in the brackets, narration we call it as. What do we call? We call it as narration. I'll write being business started with cash or being Raj commenced business with cash. Like this, we write a narration and close that entry. And close that entry means we have to draw a line like this below that. Now, when next entry is again 1st April, the same date. So like this, we write the next entry. So what is the next one? Opened a bank account with SBI, that is State Bank of India, with rupees 10 lakhs. State Bank of India is what again? It's a name of a bank. Yes, it is the name of a bank. So just look at here. It's the name of a bank. Bank means whenever names of any banks, names of any institutions, that all comes under the personal account. So here personal account and rule is debit what comes in credit. Whenever we are opening an account, yes, means the bank is receiving the amount. We are depositing our amount into the bank. So bank is the receiver. Bank is the receiver. And what we are depositing in the bank, what do we deposit? We deposit cash. So cash is what again? So always you have to remember these 3 points. That is personal, real and nominal. Yes. So here as per this, you have to remember. So cash again comes under what? It comes under real account. Real account rule is debit what comes in, credit what goes. Whenever you are depositing cash into the bank, is it the cash going from the business or coming into the business? Whenever we deposit, cash is going from the business. So what credit what goes out? That's what they written here. Credit what goes out. So our entry would be what? Bank is receiving, we will debit the bank. As per personal account rule, debit the receiver. So I will write bank account debit. Bank is the receiver now, I am debiting it. Bank account debit. What is going out from the business? From the business, cash is going out. So to cash account. From the business, cash is going out. So to cash account. So our journal entry will be bank account debit to cash account. Like this we write. That's what they have explained here in this table. So we write entry like this, not like this. This for your explanation they given you. But you have to write bank account debit to cash account. Then comes the next one. Purchased furniture and fixtures. So whenever it is purchasing furniture means furniture is which account? Furniture is a real account which we can touch and see. So whenever we are purchasing furniture, furniture is coming into the business. Debit what comes in. Furniture is coming into the business. So whenever furniture is coming, so we write like this. As per real account rule, debit what comes in now. So our entry will be furniture is coming. I will write furniture. Furniture account debit. So whenever you are purchasing furniture, what we will give to that shop person, will give cash to that person. So whenever furniture is coming into the business, cash is going out of the business. So right, furniture account debit to cash account. Furniture account debit to cash account. Like this, similarly, if you look at here, purchased goods for cash. What the first one was furniture. Furniture means an asset. Asset means which will purchase only once and it will run for the business for n number of years. So that is furniture. Goods means what is our business? For example, for a bookshop, books are goods. Whereas the shelves or racks or system or computer system, yes, that all are assets because goods we will purchase and sell daily to the customers. Whereas furniture or racks will purchase only once and it will retain for n number of years. So here goods means is purchasing for cash. Whenever you are purchasing goods or something, it is coming into the business. So as per real account rule, debit what comes in. So what is coming? I will not write goods, I will write purchases. So my entry would be like this. That is purchases account debit. So I'll write like this. Purchases debit. So whenever we are purchasing something that is coming into the business, whenever we purchase, we are paying cash. Here clearly mentioned if you just look at here, purchased goods for cash. So I'll write purchased. Cash is going out of the business. Credit what goes out as per real account rule. So I will write to cash account. Like this, we will write the entry. And as I said, now format, we have a columns called amount column. So here debit, the amount is, I am purchasing for 5 lakhs. And credit column also, it is 5 lakhs. Now, look at the next one. Purchased goods from Rakesh. Uh, Purchased goods from Rakesh. Purchased goods from Rakesh traders for rupees 5 lakhs. So what we are doing? So you have to remember one thing. If you look at here in the earlier entry, purchased goods for cash is given. When cash is given, we are doing cash purchases. Means I am taking from supplier, I am purchasing the goods, I am paying the cash immediately. But look at here, purchased goods from Rakesh traders. So whenever they mention here like this name, they are not mentioning cash or anything else in the question. They are mentioning only purchased from so and so person. It means it is a credit purchases. It is a credit purchases. Credit purchases means we will purchase today and we will pay the make the payment at the later date. So here what I'm doing, I'm purchasing. What I said, whenever I purchase, what will be my entry again? Purchases account, because goods are coming into the business. So I'll write purchases account debit and the amount is 5 lakhs again. To who is selling, who is giving me? Here I'm not giving cash. Why? Because if you look at here, he's not telling any cash payment is done. Yes, he's only telling we are purchased from Rakesh. So who is the giver? Rakesh is a name of a person. It comes under personal account. So as per personal account rule, debit the receiver, credit the giver. So he's a giver to me. He's giving because I am purchasing. I am means my business. Here the business is my business, that is, I am Raj and it's my business. I am purchasing from Rakesh Traders. So here the giver is credit the giver Rakesh Traders. So I'll write to Rakesh Traders account. And the amount is again, it's 5 lakhs. And again it is 5 lakhs. Next. Okay, the next one. Paid for advertisement, rupees 10,000. Advertisement comes under what? Advertisement comes under, advertisement is what? It's an expenditure to me. Advertisement is an expenditure to me. Expenditure means it comes under nominal account. Advertisement comes under nominal account. Why? Because debit all expenses, we said. What we have discussed in the earlier class, debit all expenses as per nominal account, credit all incomes and gains. So here advertisement is an expenditure to my business. What I will do, as per nominal account, debit all expenses. So I will debit advertisement. I will write advertisement. I have to debit now. So advertisement account debit and the amount is 10,000. So whenever I am paying advertisement, what I am paying for that? I will be paying cash. So cash is what again? It is a real account. Credit what goes out. So I will write to cash account. And the amount is 10,000. Next. Sold goods to Vinith Traders rupees 25,000. So what we are doing? We are selling goods to, yeah, sold goods for cash for rupees 10 lakhs. What we are doing? We are selling goods. What basis we are selling? On cash basis. Whenever we are selling, sales means what? We will be selling some goods or some things. So whenever we are selling goods, goods is what again? Is it, you have to only able to decide whether it's personal, real or nominal. You should be able to differentiate whether it's personal, real or nominal. So goods means what? It's a real account. We can touch and see them. So real account rule is what? Debit all expenses and credit all, debit what comes in and credit what goes out. So here sales means goods are going out of the business. When you are selling goods, here clearly mentioned sold goods for cash basis. So whenever it is cash, cash is again what? It is a real account. And in real account, rule is debit what comes in. When you are selling goods, customer is giving cash, means cash is coming into the business. So we will debit the cash. Debit what comes in. Cash is coming. So I am debiting the cash and the amount is 10 lakhs. By what we are receiving? By selling the goods. Sales is what? Sales is again real account. Credit what goes out? Goods are going out of the business. So cash, when goods are going out of the business is receiving cash, that is 10 lakhs. Next, sold goods to Robert traders, not Robert traders. Just give me a second. Yeah, sold goods to Vinith traders rupees 2 lakh. So what I said, whenever there is no word of cash in that transaction, that would be treated as a credit transaction. That will be treated as a credit transaction. So here, when goods are sold by to Vinith traders for rupees 2,50,000, here it is a credit transaction. Why? Because he is not giving us cash, but he will pay us at the later date. So our entry would be sales is again what? It's a real account, and real account rule is debit what comes in, credit what goes out. Whenever here cash is not coming, why? Because it is credit sale. He is going to pay us after some days or some months. So in that case, what will happen? Here, we will not receive the cash immediately. We will receive it at a later date. So whenever we are receiving the cash at later date, in that situation, here, there will be no cash transaction will be there. Goods are going, so sales is a real account. Credit what goes out, sales are go, that is goods are going out. So in that situation, what we will do, we will only take here who is receiving. Whenever I am selling goods, who is receiving? Vinith is receiving. Vinith is a personal account. Debit the receiver. He is receiving. I am selling goods and he is receiving. So what I will do? I will write here like this. That is, we need the trader's account debit and the amount is 2,50,000. By how we are doing? We are selling our goods. So to sales account 2,50,000. Is it clear? Next. Next, look at you. Sold goods to Robert Trader. Same as it is transaction. So here instead of Winnie, who is receiving? Robert is receiving. Debit the receiver as it is a name of a person. We will write Robert Trader's account debit. That is 2,50,000 to sales account as it is a sales. So we write here again, it's the same amount, 2,50,000. Now look at the next one. Paid Rakesh Traders 2 lakhs through check. If you just look at here, this entry, what he did first? First we purchased goods from them worth of 5 lakhs. Now what we are doing? We are making payment to them. To whom we are making? To Rakesh Traders. So now Rakesh Trader is what? Is a personal account, is a receiver now. We are paying him amount now. So he's a receiver. What we are paying? We are paying through check. Check means cash or check. It's a real account which we can touch and see. Yes. So whenever we are giving check, it comes under real account. Credit what goes out. Check is going. So it going means how we are making payment through bank. So our entry would be like this. Debit the receiver. Rakesh is receiver. So Rakesh Traders account debit. Amount we are paying is 2 lakhs. How we are paying? through check. So to bank account, and the amount is 2 lakhs. Next, paid rent to the landlord. Look at here, paid rent to the landlord. So rent means what? Rent is an expenditure to us. So whenever it is an expenditure, it comes under nominal account. Nominal account rule is debit all expenses and losses. So here rent is what? It is a expenditure to us. So what I'll do, I'll write here like this. That is, what should I write? Whenever you remember, whenever expenses are given, we have to write the expense name only. So here I am least bothered about to whom I am paying. I am bothered only what is the name of that expenditure. That expenditure name is rent. So debit all expenses. It's an expenditure to me. I am debiting to rent account to debit, and the amount is 20,000. So to whom I'm paying is least bothered. That will be ignored. Okay. So whenever I'm paying rent means what I will pay? I will pay either cash or check, through online or check I'll give. So if I give, I assume here I am paying cash. So I write cash is going, whenever I'm paying rent, cash is going out of the business. All right. To cash account, and the amount is 20,000. Next, paid wages. Same. It is also an expenditure to us. So I will write wage, debit all expenses. No, it's an expenditure. So I'll write wages account debit, and the amount is 20,000. Whenever we pay wages, what we will pay? We will pay cash. So cash is going out of the business. Cash is a real account. So to cash account, and the amount is 20,000. Next, salaries. Salaries is also an expenditure to business. Well, right? Salaries. Expenditures all should be debited. So salaries account debit, and the amount is 550,000. Whenever we are paying salaries either through bank or that is through check or cash. So I'll write here to cash account, and the amount is 50,000. Next, look at that. Received from Vinith Traders rupees 1 lakh. What we are doing? We are receiving the Vinith Traders. Just look at here. Earlier, we sold goods to him on credit basis. For 2,50,000, we sold our goods to the customer. That name is Vinith. Now he is paying us amount. So we are receiving now. We means our business is receiving. Whenever our business is receiving the cash, so debit what comes in. Cash is a real account, is paying us. Debit what comes in. What is coming? Cash is coming. Who is paying? Vinith is paying. Vinith is again a personal account. So cash is coming. As per real account rule, debit what comes in. Cash is coming. I am debiting the cash and is paying 1 lakh rupees. Who is paying? Vinith is paying. Vinith is a personal account. Credit the giver. He's giving. So we are writing crediting the Vinith to traders account. To Vinith traders account. And the amount is 1 lakh. Like this, we write, only have to remove, able to differentiate between whether it is a, which account, it falls under which account. Is it real account, personal account, or nominal account? You should be able to differentiate it comes under which account. Then it will be easy for us to differentiate, or and it easy to uh, write the any journal entry. Is it clear? Yes?
Yes, it's clear.
Yeah. Okay. So now what I'll do, I'll move to the next one. What I'll do, I'll just move to the next question. So like this, we go on writing all the journal entries. So what I insist is this is how we write. You can just look at here. I think the screen is visible to you all. You can just look at here. This is how we write. Whatever I've written is are this only. So the next topic is ledger. Whatever entries we have written over here just now is all ledger. For example, if you look at your cash, if you can just look at your cash is coming many times. Here in the first entry, the next one, whenever we are depositing cash into the bank, whenever we are purchasing any asset, whenever we do any purchases, or whenever we incur some expenses like advertisements, salaries, wages. So we are coming across n number of times about the cash transaction or the term cash. So now ledger will help us to find out at a time what is the balance of cash that is available with us. Means we will try to summarize this journal entries into the form of ledger. And even you can just look at a Vinith is coming many times, either two times. Rakesh Traders is coming two times. Purchase is also coming 3 to 4 times. Yes. So this all we will try to bring it together so that we, for example, we write a cash account where we will at the end of the year it will be easy for us to check that what is the balance of cash that is available with us. Now at the end of the year we will able to find what is the balance or what is the total purchases we did in this particular year, and also we will able to find out what are the sales that are available or what are the sales we have done throughout that year. That will help us. This all can be possible only with the help of ledger account. Ledger account in simple terms we call it as a T-shape account. T-shape, like T-shape. Why? Because it's an account where a page is divided into two parts. The left hand side we call it as debit and the right hand side we call it as credit. Left hand side, a page will be divided into two parts. The left hand side we call it as debit side and the right hand side we call it as credit side. And the format will be, the first will be the date column. Next would be the particulars column. And the very nominal line or next nominal column would be JF number. JF number means journal folio number. This journal folio is nothing but just now whatever journal entries we have written, that number we're writing here. For example, cash, so many times it came, so whatever the number we allotted, that we write here. So it will be easy for us to look out that in reference part. So date, particulars column, journal folio number, and the amount column. Similarly, on the right hand side, credit side also we write again date column, particulars column, journal folio and amount. So this is the format of journal entries. Sorry, ledger accounts. So this is a ledger account. If you can just look at here, this is how we prepare it. I think the format has been, yeah, you can just look at it. This is the format. Means don't take this part, this written part. Only this is the format. Name of the account means any name. For example, cash account it is. I will write cash account. Yes. So this is the cash account. We write like this. Here we write cash account. And next we have, see, this is date, particulars, JF number, amount in rupees, date, particulars, JF number, amount in rupees. So this side we call it as credit. This side is credit and this side is debit. This is called credit side and this is called debit side. This is the format of ledger accounts. So now how to prepare ledger account? Just look at here. First we write journal entry. From that journal entry we prepare the ledger account. So if you look at first, look at your journal entry. Date column is given 2017 April 1. Purchase account to cash account. Purchase account debit to cash account. So here what we are doing, first we will prepare cash account. Just look at a cash account. Now whenever we are posting, this is very important. Here we are preparing two accounts. One is cash account, the other one is purchase account. Look at here. In this entry we have two now. Purchase account debit to cash account. So we will prepare two ledger accounts. The first one is purchase account. The other one is cash account. The first one is purchase account and the other one is cash account. So whenever we are preparing, first we will prepare cash account. Just look at a cash account. We have drawn debit, credit. Just look, I think you can see this. Debit side and credit side, both the sides it's been given. And so you can just look at your debit and here it is credit. And now while writing, while posting, this is called posting. When we are writing from journal to ledger, that is called posting of entries from journal to ledger. So here, look at your cash is in which place? This place is called credit place. That's the reason purchase account debit to cash account. Purchase account debit to cash account. So purchase account debit to cash account. Now cash is in which place? It is in credit position. So when we are writing in cash account, we will come to the credit side. So you can just look at your credit is given now. Here credit. So here on credit side, in the same cash account, we will not write same as cash. We will write opposite of that one. Opposite of cash is what is here? Purchase. Opposite to cash, what is there? Purchase. So in cash account, as cash is in the credit position, I will write in the credit side, but I will write purchases. What do I write? I will write purchases. Why? Because it is opposite. I cannot write cash and cash. Why I am receiving cash? Why cash is going? Because I am purchasing something. Yes. So I'll write here buy purchases. On credit side, we write buy. In journal entries, we won't write, we write only two. But in account, ledger accounts, we write buy purchases. In cash account, we write opposite of that buy purchases. And the amount is 25 lakhs. Now, when you come to the purchase account here, now purchase is where here? We just look at in journal entry. In journal entry, purchase in debit side. You can just look at your purchase account debit is given here. Yes. Purchase account debit is there. So we will come to purchase account and we write on the debit side. Why? Because it's debit side now. So we write on the what we will write? We will write opposite of that one. Opposite of purchase is what here? Opposite of purchase of that is cash. So we'll write cash. So whenever you are posting any journal entry to ledger account, when we preparing that particular account, we not write the same transaction. We write we will not write the same name of that item or same account. We take the opposite side of that one. So I think this you are able to understand the journal to ledger. Next, we move to the balancing of accounts. So we balance this accounts. For example, here there is no balance, only one item is there here. Yes. So I will want to close. Balance means closing that account. Every year I want to know what is the balance. So when I looked at here on April 30, my balance is 20. There is no balance. It's an overdraft because there is no debit side. So balance on credit side, if it is more and debit side is less, it will be overdraft in the cash account. And in purchase account, what we will write here? Whenever we balance, if the difference is less on credit side, we write by balance carried down. By balance carried down. And if the difference is on debit side, we write to balance carried down. And for the next month or next year, it will become, for example, the credit side is less, we write by balance carried down. The debit side is less, we write to balance carried down. When we bring it to the next month or next year, it will become to balance brought down. This will become to balance, means we are bringing that balance to the next month. To balance brought down. Similarly, this will become by balance brought down. This will become by balance brought down. So like this, we will write the balance that particular account. Next. So that's what he's telling here, balancing of accounts. Balance carried on or balance brought down. So this is how we prepare this ledger account. You can just look at here. I think journal entries they have taken from the problem, earlier problem, this problem. From here they posted. What is the first entry? Cash account debit to Raj capital account. So they are preparing cash account. Now look at here. Cash is in which side? Just look at here. It is in debit side. Here cash account debit. DR means debit side. But what I will write in that account? I will write Raj. Opposite of cash is what here in this entry? Raj. So just look at here. To capital. That is to Raj capital. Similarly, the next one. Just look at the next one. Bank account debit to cash account. Actually, it's a contra entry. Okay. Bank account debit to cash account. So, see, bank was there on the debit side and cash was on credit side. So, credit side they written by bank amount. Similarly, opposite to that we will write. Now, look at here. Electricity charges account debit to cash account. Now, cash is where? Cash is in credit side. So in cash account, we will write on credit side. What we will write? We will write by electricity charges, opposite of that one. So cash account credit side, see, by electricity charges. This is credit side. Look at here, the above. Here, this is credit side. So by electricity charges. Now after writing all those things, you just look at the balance I was just talking now. This is the balance. By balance carried on means here the total is more on the debit side total is 62 lakhs and there is a difference amount, credit is less. So when debit is more and credit is less, we write on the credit side. As it is April month, we will write April 30, ending of that month. We want to know what is the difference or what is the balance left over in that account. So at the end of that month, by April 30, by balance carried on. How I got this amount 41 lakh 58,000? The difference of the 62 lakhs. 62 lakhs minus this all amounts, I got the difference of 41 lakhs 58,000. And this is called closing of account. Like this, we draw two lines below this. And this balance will bring it to the next month. And after April, what is the month? We have May 1st. May 1st, two balance brought down. Here it is called as carried down, and when you bring it to the next month, we call it as balance brought down, and the amount is 41 lakhs 58,000. Like this, they prepared all, like this is only cash account. Like that, whichever item is repeatedly done, that they have prepared all ledger accounts. All ledger accounts. For each item, they prepare the ledger account. This is how we write journal and ledger. Now we move to the next topic, that is subsidiary books. So subsidiary books are those books which most probably and maximum whatever the transactions takes place, more number of transactions exist in these books. So subsidiary means it's nothing but like journal we write, but it's like both journal as well as ledger also we can assume. It's a like part of journal only, and here we have 8 subsidiary books. One is purchase book, purchase return book, sales book, sales returns book, journal proper, bills receivable, and bills payable. Bills receivable and bills payable. Like this, we prepare 8 subsidiary books. Now, in these 8 books, what are actually we think, ma'am, we are writing already journal entries. Then why again we are preparing the subsidiary books? Because in we will not in these books we write only credit transactions. We write only credit transactions. And just look at your purchase book, sales book, purchase returns book, sales returns book, bills receivable book, and bills payable book. So these are, and even the cash book also. So here in purchase book, sales book, purchase return, sales returns, we write only credit transactions. Means whenever you are purchasing from supplier, if you are purchasing on credit basis, that will be recorded in the purchase book. Even the whatever we are selling to the customers, if it is credit sales or credit transaction, if you are doing with the customer, that will be written here in the sales book. So here you can just look at the format and you may get it out, ma'am. If you are writing all credit transactions in the purchase book, then where are we writing the cash transactions? We write cash transaction in the cash book. Okay. So here you can just look at this is the format, date, particulars, invoice number, LF number, details that is in rupees and amount in rupees. Here you just look at here. This means what is LF means ledger folio. Particulars means what you are writing, you will be writing whatever the goods you are purchasing, how many, what is the quantity, what is the tax, but all details you'll be writing in the particulars column. And this is the sales book. Here, credit sales are recorded. Here, outward invoice number. If you look at here, whenever it is purchase book, it is invoice number, and here it will be out because the goods are going out. We write outward invoice number. Now, purchase return books means when goods are returned back. There it was inward invoice number. Now it will be debit note. Means we are returning the goods to the supplier. If we found any defective good or if you find any defective thing, that we will be returning to the supplier. Next, sales return book. Here customers will return the goods to us. So whenever the customers are returning goods, that will be credit note to us. The same format, it will be credit note to us. So bills receivable book. Whenever bills received from the whenever we have credit transaction, we'll receive bill that will be written over here. Whenever we have to pay the bill to supplier, then we make a note over here. General proper means where there are certain transactions which will not be recorded in any of the books, that will be recorded here, like opening entries, closing entries, transfer entries, adjustment entries, entries for rectification of errors, miscellaneous entries, that all will be written over here. And the next comes the cash book. Cash book is same as the cash account only. How we prepare date column, particulars, LF number, cash, date, particulars, LF number, amount column. And again same debit, and left hand side we call it as debit and right hand side we call it as credit. And here cash book means we write only cash transactions. We write only cash transactions. Debit side is whatever the cash we receive and credit side is whatever the cash we expended or the expenditure that we incurred by the business, that will be recorded on the credit side. Next, double column means here it will be 2 column. One will be bank or discount column. It will be, you can just look at you. It will be cash or discount or bank or discount column. Discount will, there's the additional column whenever it is called 2 column cash book. And whenever it is 3 column cash book, it will be cash, bank and discount. 3 column or triple column cash book we call, that is Discount, cash and bank column are the extra column that will be written here. So here the problems are given to us. Let's do it. Okay, first we go for the purchases because simple. Just look at here. Now I'm not going to, first I will try to discuss only purchase book. Okay, so we will take into consideration only purchase transactions. So the look at here the third one, bought goods for cash. So which type of transactions we write in the purchase book? We write only credit transactions. We will not write cash transactions in the purchase book. We write cash transactions in the cash book only. So this I will not check. Next, look at here. Purchased goods from Mahishmati and company for rupees 58,000 less 10% trade discount. So it is a credit purchase. We have not given any cash. How we will identify whenever there is a name given, company name is given, and there is no mentioning of whether it's cash or what. When only name is given and we are purchasing, it means it's a credit transaction. It is a credit transaction. So just look at your purchases from Maheshmati, where it is. No, it's not that. See, yeah, look at your purchase book. On January 5th, we are purchasing goods that is 58,000. But he said na trade discount 10%. So 58,000 into 10%, 5,800. When you deduct it, you'll get 52,200. Now, similarly, like this next one, look at it. Purchased goods from Shamsher and company. Here also, they mention only company name. There is no mentioning of cash word. So it is a credit transaction. So again on 21st March, 21st January, we write as uh, goods from Shamsher company 87. There is no discount for here. Because they are not mentioning anything, there will be no discount. So just like this, right? Where it is? Yes. Shamsher 87,000. Next, look at the next one. Do we have any other purchases? Purchased furniture. So here we are even purchasing furniture. Furniture is what? It is an asset. So that will be not taken over here. Where it is? So that will not take, only be balanced. Here we take only goods. Purchase or sales means we take only goods, means what our business actually will do. If you are a stationery shop where you will sell books, books are your purchases. If you are purchasing some computer, that is not your goods. That is purchase of asset. Purchase of assets will not be taken in the purchase book. So we are having only two purchases. One is from Maheshmati and the other is from Shamsher. So this is how we prepare the purchase book. Similarly, we prepare the sales. Look at here. Sold goods to Kattappa, rupees 64,000. So come to sales book. There we write Kattappa 64,000. Look at here. Where is the, yeah, Kattappa 64,000. Next, look at the next one. Sale. Sold goods to Bahubali and company, rupees 89,000 less 20% discount. So we are selling goods to Bahubali and company. So again we write Bahubali and company 89,000, but we are giving discount to the customer 20%. So we write here 20% discount. That is 89,000 and 20%, 17,800. Difference would be 71,200. When you add these two, you'll get 1,35,000. This is our sales book. Like this, we prepare the sales book first. Whenever anyone is returning, that we write it in the returns book. Kattappa has written 40,000, so we write sales returns. And when Shamshir has written 6,000, so we write purchase return. Next, we'll try to understand in the next class about the cash book. That is three-column cash book. Okay, we'll continue it in the next class. Is it okay?
Okay, ma'am. Thank you.
Thank you.
Good evening, all of you. Good evening.